Hello everyone, so you did your research and have landed on the conclusion maybe I should invest in VTI. Why is VTI so popular? And is VTI even a good investment? Well, in this video, we're going to figure that out together. Vanguard Total Stock Market, aka VTI, is an ETF, exchange traded fund, meaning it trades as one stock, but within that investment is the entirety of the US economy. So for the current price of $236, that will be your ticket cost to be a part owner of the United States. If you are bullish on the American dream, the way of life, and future as the innovation hub of the world, then VTI is the way to go. With this index fund, you are believing in the American economy and businesses thriving rather than being knowledgeable about every single company in the portfolio. Buying into VTI is kind of like buying an adult admission fee to Golden Corral, which is an all-you-can-eat buffet place that absolutely slaps, especially on a weekday evening. That one ticket grants you access to the entire buffet: burgers, tacos, steaks, salads, desserts, and whatnot. That's what VTI is. It gives you ownership and access to all of the US stock market. Alrighty, so reason one. So when we look at how VTI has performed for the past 5 years, well, the total return is 113%. Year over year, that breaks down to a 14% CAGR. And CAGR essentially stands for compound annual growth rate, which is the total return that you see once you put the profits back into the investment. And in this case, the dividends. This is absolutely respectable. 113% return for the past 5 years. And what about 10 years? Well, 10 years performance, VTI has returned almost 200%. And when you break that down year over year, that was an 11% CAGR. Now, if you're anything like me, then you're curious about how it performed in the past, even though people say the past performance is not indicative of future gains. Well, anyways, if you had bought $1,000 of VTI back in 2013, it would now be worth $3,742 in 2023. This is a solid, steady investment, like a good pair of dad shoes. I've been wearing dad shoes since 2004, before it became cool. And VTI is like a pair of my favorites because they're reliable, they support my dreams, and they're easy to understand. I don't need weird gadgets attached to my shoes to make it complicated. VTI is simple and it performs well. If you don't know what to get that man in your life, especially for his birthday or the holidays, the answer is always going to be a good pair of dad shoes. Reason number two as to why VTI is so popular? Yes, I am recycling the slide that I just used. VTI makes investing as easy and simple as possible. If you are stressing hours over whether or not to invest in Tesla or to Nvidia or any other big company, or if you hate the idea of researching companies to see which ones will be dividend compounders with cheese, then just put your money into VTI. This is not financial advice. And let VTI do the work for you. Why? Because if you believe in the American economy to thrive, then you will be rewarded for it. I will expand on this point later on. Stick with me. Reason number three as to why everybody loves VTI? Well, it's the dividend. The dividend yield is not the highest, but it's respectable. The annual dividend that you get is $3.41, but this is what I want to call out and why it's so important. The payout ratio is about 30%. This is a green light and a green flag. The dividend growth rate is 7.21%. It's higher than the traditional rate of inflation. It's a good, solid dividend. It ain't juicy, but it's respectable. Let's see this dividend growth play out visually. So as you can see, 10 years ago, the dividend payout was $1.67. When you fast forward throughout the years, they have been increasing it year over year, and as of last year, they pay out $3.18. This is the definition of a dividend compounder with cheese. Look at the difference 10 years makes in the dividend payouts. Reason number four as to why I love VTI. Why VTI is a good investment. VTI is really diversified and a natural hedge against risk because there is 3,761 holdings within VTI. So why are there so many holdings? Well, VTI is an index fund that consists of the entire investable US equity market. It includes small, mid, and large cap companies. And for the stock market nerds out there, the breakdown is this. VTI is roughly 82% large cap, 12% mid cap, and 6% small cap stocks. So put more simply, VU is inside of VTI. And what do I mean by diversification helps mitigate risk? Well, using this very simple illustration. So let's say an ETF has 4 holdings, so 4 stocks with equal weighting. Now on a particular day, let's say Charmander goes down by 30%. However, the other 3 stocks collectively go up by 30%. Well, then your total return is going to be 0% instead of negative 30. So when you see this play out in VTI with 3,761 companies, it'll just be on a bigger scale. Diversification helps mitigate risk as a general rule of thumb. So reason number 5 as to why we love VTI. It is a GOAT. When we look at SCHD, which is another really popular ETF that everybody likes to rave on about, when we look at SCHD's past performance, the last 10 years, well, they returned 191%. Yeah, that's respectable, but VTI in that same time period returned 196%. And when we break that down year over year, well, SCHD returned 11.3% as a CAGR, whereas VTI returned 11.5% as their CAGR year over year. VTI is a GOAT. Reason number 6 as to why we might as well propose to VTI? Well, it has a very low expense ratio. Nearly every ETF out there has some sort of fee baked into it. The assignment for us, the investors, is to try and find a good ETF while paying the lowest fees possible. VTI has an expense ratio of 0.03%. So if your portfolio returns $100,000, then you're paying $30 in management fees to the Vanguard fund managers. It does not get better than that. You don't hesitate to spend $30 when you're at Costco and you put another case or 2 of ice cream into your cart. So what's $30 after you make $100,000? And this is an important call out that I want to make. That $30 is deducted from the dividend and capital gains distribution and not from your principal amount. And in my personal opinion, this is the best reason as to why we love VTI. It is boring and it's not flashy. There's absolutely no reason to worry about academic research or concern yourself with portfolio theories. You have decades of history on your side when you are investing in the US economy. If you believe in the United States and that we will be a powerhouse in the future, it's quite literally the best option of set and forget investment out there. You put your money in and you look at your portfolio a few times a decade and then be satisfied in 10 to 30 to even 40 years from now. The past 20 years, the total return has been 547%. That breaks down into a 9.7% CAGR year over year. This is phenomenal. It is boring, but it is amazing. So what's the strategy behind investing into VTI? Well, if you are a busy individual, then there is no time to predict, to guess, or to pick individual companies as an investment that you can go to sleep at night knowing you did your research and you feel great about. Instead, you are betting on the United States. I know I keep emphasizing this, and the Eagles that keep flying higher and higher. VTI invests in thousands of different US companies across industries and sectors. Inevitably, the statistics are in your favor because this means that you will be investing in the winners of the market. And if history can tell us anything, it's that the winners will win harder than the losers lose, which means over time, you should have decent returns. But it's important for me to call out that there may be a year or two over a 20-year horizon when things go bad and it goes negative, but that's natural and normal economic behavior. So let's respond to a common concern, which is, I can't like VTI because it revolves around the US. What about the rest of the world? What about the international global market? If you are concerned about the lack of international exposure, like the pending growth of Africa, that's been the conversation for like the past 30 years, the technology boom of India, or manufacturing expansion in Southeast Asia, do you actually think American companies only operate in the US? American companies understand the assignment, and growth is the name of the game. American companies have international segments of their business and targeted demographics in every region of the world, except North Korea, that is. I phones? Yeah, people are using those in New Zealand, in Bangladesh, in China. Microsoft Word? Yes, corporate employees in Singapore are using OneDrive to be aligned on various projects. McDonald's? I've had their signature fries all around the world from my military journeys. So for me, investing in VTI is investing internationally. And on a side note, this is anecdotal, but both of the Fortune 20 companies that I worked for had major revenues from our overseas teams. So I can't be bothered with intentionally trying to have exposure to international stocks. And let's go ahead and address another common call out, which is surely the US economy can't keep going up, can it? Let me paint this Bob Ross painting for you. When you get up in the morning to go to work, do you do so with the mindset that your 8 hours of effort will amount to nothing? Or do you expect to get some work done and end the day with more than you started with? When a corporation of 100,000 employees finishes a work day, do you think they've done nothing at all and made no progress? Or do you think they have produced 1,000,000 hours of work and that would make the company worth a little more than it was yesterday? In realistic terms, the stock market and VTI will continue to go up forever. Obviously, some years it goes down, but on average, it will continue to go up because it is the sum of all the work of all the people in the economy and assets in that fund, which is VTI. Every decade or so, more recently 2009 and then in 2020, there will be a bad year. And that's because we are human and we have bad years. But long term, it is outrageous to imagine that we all get up to go to work, to do work all day and do work all year to only be worse off than we were when we started. This is the reality of the US market and economy. This is not Japan or some Eastern European country. The United States is the land of opportunity, where startups are born and raised, where the world's best talent want to work and live. This is America. We eat, breathe, and do innovation and competition. Companies will always try to one-up one another, to get better, to take more market share, to be optimized in their operations, and to serve a demand that is not currently being fulfilled. Companies will fall, and new ones will take their place with better offerings for the consumer. Innovations will always come, and you will see it in market growth and in your portfolio VTI as an uptick in the total return. If you made it to this point in the video, would you please consider subscribing? That's all I want for Christmas, good sir. Anyways, even if you don't choose to, Dividend Compounders with Cheese signing off. Stay safe. VTI is the GOAT.